Trinidad and Tobago, and welcome to the Bourse Report. Well, earnings season, as usual, is in full swing around this time, and today we're taking a look at the results of Sagicor Financial Corporation for their 6-month period ended June 2020, as well as JMMB Group Limited for their first financial quarter ended June 2020 also. Now, both of these stocks are intertwined to some degree, with JMMB owning just over 20% or 22.5% stake, in fact, in Sagicor. So let's take a look at what would have occurred over the past financial quarter and financial half year in the case of Sagicor, and what investors might expect looking ahead. Turning first to Sagicor Financial Corporation, and the group would have recorded a loss per share for the first 6 months of 2020 of 20 cents, tongue twister there, compared to a profit of 34 cents per share on a fully diluted basis for the comparable period in 2019. Now, it wasn't good reading across the board from a revenue perspective. Revenues were down just around 18.5%, from 984 million US to 801 or 802 million US roughly. Total benefits and expenses decreased by a less than proportionate amount, from 908 million to 796 million, so just around a 12.3% decrease there. Overall, the share of profits of operating losses or income from associates would have also swung from a profit of 8.7 to a loss of 24.1 million, and net losses for the period, or net income for the period before accounting for minority interest, decreased 38% from 58.4 million to just around 36 million. Overall, after accounting for the impact of minority interest, that earnings per share attributable to common shareholders would have gone to a loss or negative amount of that 20 cents per share. Now, from an income before tax by segment perspective, it hasn't been pretty reading as well. Sagicor Jamaica, the stalwart of the Sagicor Group's performance historically, would have their income before tax or profit before tax would have declined from 72.9 million by over 60% to 27.1 million. Again, decreases in revenue as well as a less than proportionate decrease in operating expenses, and the impact of higher credit impairment losses as well as lower performance from financial or investment portfolios would have all weighed on performance across the group. Sagicor Life, in that yellow column there, would have swung from a profit of 16.3 million to a loss of 21.8 million, and Sagicor Life would have swung, well, actually worsened it. Sagicor Life would have swung from or reduced from a profit before tax of 27.2 million to just around 8.6 million, and we can see that in that green sliver of this column. So, looking ahead, well, Sagicor has consistently been a pretty stable dividend payment stock over the past few years. Now, could that change in the coming months? Well, only time will tell. There has been some questions surrounding their growth from acquisition strategy, with the Jamaica deal for Scotia's insurance arm, as well as their Trinidad arm of their insurance operations, falling through the cracks. Notwithstanding, the British American and PICO portfolios are still in progress, and we do expect that to be completed at some point in time. But the company still has a lot of cash on the sidelines or on their balance sheet, and they will be actively pursuing, we feel, acquisitions throughout the Caribbean region to add to their overall investment portfolio and grow the business. Notwithstanding, at the current trading price of $6.20, Sagicor is trading at a price-to-earnings ratio of around 35 times, which is well above their Canadian peer average of 17 times, and offers a dividend yield of 4.7%, which is below their Canadian peer average of 5.3%. So because of those relatively high valuations, as well as the continuing adverse economic conditions, particularly in their main operating jurisdiction of the wider Caribbean region, Bourse maintains a neutral rating on Sagicor. Turning quickly to JMMB Group Limited for their financial quarter, or their fiscal quarter, first quarter of 2021, the group recorded earnings per share rounded of just around 2 cents per share, which was a 42.6% decline from the 3 cents per share roughly recorded in the prior comparable period. Net interest income was actually up 10.4% from 100 odd million to 110 odd million TT equivalent. Operating revenues net of interest expenses, however, were down 38.3 million or 14.5% to just around 227 million. Overall operating profits would have declined just around 40% to 50.7 million, and net income attributable to equity holders of the parent would have declined just around 31% from 50.5 to 34.9 million. Now, the reason the earnings per share would have decreased by a more than proportionate amount of 42.6% would have been, as investors would recall, an increase in the number of outstanding shares over the comparable periods because of the additional public offering which took place towards the latter end of 2019. So, from an operating revenue segment, GMMB is looking reasonably resilient. Net interest income continues to grow steadily. Gains on securities trading would have been the hardest hit over the period, and that's not too big of a surprise given what's happened in the Jamaican market as well as wider global financial markets, falling from 98.1 million TT equivalent to just around 60 million TT equivalent. Fees and commissions remained fairly stable, and foreign exchange margins were adversely impacted, probably because of that depreciation of the Jamaican dollar, with foreign exchange margins falling from 33.8 million to just around 24 million TT equivalent. Now, one of the big talking points for investors is that, in fact, that 22.5 odd percent stake in Sarodh Financial Corporation, which GMMB is carrying on its books at around 1.74 billion TT equivalent. Now, when we take a look at the TT dollar equivalent price of the Canadian stock price, which is publicly traded and observable, and taking into account the position that GMMB holds, that market value of the exact same position is just around 1.08 billion, which is quite some distance from that 1.74 billion that GMMB is carrying it at on its books. So that could present a potential risk in terms of loss of revaluation of associate for investors in subsequent quarters if that price on the publicly listed, on the Toronto Stock Exchange rather, does not improve meaningfully over the next coming few quarters. So on the basis of operating revenue volatility, the potential for that Sarodh revaluation, adverse economic conditions in Jamaica, Trinidad and Tobago, the Dominican Republic, the major operating jurisdictions of GMMB, and of course the reduced dividends which would have been mandated by the Bank of Jamaica, Bourse is going to maintain its neutral rating on JMMB Group Limited. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website where all of our research is absolutely free at bourseinvestment.com. And of course, you can check us out in today's Guardian as well, the bigger, better Guardian. That's it for this week's edition. And you can have yourselves, of course, a very wonderful investing week. This has been the Bourse Report.